Okay, welcome to lesson one. Take a couple minutes to read the following risk disclosure. Okay, let's start with lesson one, introduction to the Forex market. Okay, and after this lesson, we're going to understand what the Forex is. You're going to understand how to trade the Forex. You're going to see how the Forex moves like any other market, like the stock market, treasury market. Understand that the Forex can only move in three directions, up, down, or sideways. And we have strategies for all three. Learn the different types of order used in trading. Understand how to place an order. I'm going to teach you exactly how to place an order. Learn how to make money trading the Forex. Learn how to protect financially if the trade goes the other way. If it goes against you, you want to limit your losses placing a stop order. And very important, never forget this rule, 21 days, 3%. The human mind forgets in 3 days 80% of the knowledge it acquires. And then during the next 18 days, the loss of information continues in the mind and will only retain about 3%. So that means you have to be good at anything, it needs practice. You need a mentor, you need to review the information, and then it becomes habit. Once it becomes habit, you retain the information. And this is a very key quote I like using. Successful people will do what unsuccessful people won't and can do. That means successful people have certain traits, and you want to follow those traits. They think differently. They act differently. Okay, they view the world differently. Okay, so let's start. What's the Forex market? The Forex market is known as the foreign currency exchange. Traders call it the spot market and cash market. It's a network of over 4,500 world banks. It is non-centralized exchange, means there's not one physical place. You trade with different brokers around the world. There's not one place that the trade, like the stock market, that there's only one centralized, like the New York Stock Exchange, or all the orders go through the NASDAQ or the American Stock Exchange. Now, why is the Forex market relatively new? In 1994, they removed the margin requirements, and before you used to have hundreds of thousands, even millions to trade. Now, investors with $200, $500 can open up a trading account. Okay, so that opened up the world. You can see here with 300, some even have lowered that requirements. It doesn't require a lot of capital to start trading now. You can open up an account and start making money in the Forex market. You can see the averages. The U.S. stock market trades $100 billion, okay, a day. The Treasury market trades $300 billion a day. The Forex market trades $2 trillion a day. So you see the volume. There's days that it gets up to 5.5 trillion. It's the largest market in the world. Okay, what is trading the markets all about? Not having a boss, not having employees. You work your own time. You don't need leases. You don't need receivables. You don't need a license. There's no bad debt. You work your own schedule. You work at home for yourself, making your own decisions. You create your own potential financial independence. Trading is a means of making money. You make your money work for you instead of you working for your money. Okay, you're going to start trading from your computer over your phone, and you place the trades. And when you become members with us at WG Alerts with Wealth Generators, if you go WGAlerts.com, you could sign up, and I'll talk about that later, how you could become a member and learn how to trade and get trading alerts from experts. You can trade this market 24 hours a day, 6 days a week. The Forex market opens, depending on the broker you trade, around 2 p.m. Eastern and closes at 4 p.m. Eastern on Friday. So unlike the stock market that it opens and trades every day, the Forex market opens once a week and closes once a week. So you could trade this at 3 a.m., 2 a.m., 1 a.m., at 7 a.m., at 2 in the afternoon. 8 in the afternoon. Whenever you have time, you can trade this market. Okay. There are 3 sessions to trade every 24 hours. You have the ASIN session. Okay. And remember, the market doesn't close or open. This just means that the people or the banks, the financial institutions in Asia are trading at this time. This is Eastern time, which is New York time. So depending where are you in the world, you would adjust yourself to these times. I'm always going to be talking Eastern time here. Europe from 2 a.m. to 11. U.S. trades from 8 to 5. Usually the banking sessions. Usually when there's overlaps, for example, the London and Tokyo, or London and New York. Okay, when there's overlaps, for example, from 8 to 11, that's a very active session. Or say from 3 a.m. to about 5 a.m. where you're finishing Tokyo, but London's trading. That's another active session. Or when you have Sydney at night, when you have Sydney, which is Australia, and Tokyo trading, you also have an active session. Now we're going to learn all the terminology so you become familiar with and you want to study this lesson several times to become familiar with this. Currency pairs. All the currencies trade in pairs. Okay? So for example, you have the dollar, Swiss franc, the dollar, Japanese yen, the euro dollar, pound dollar, dollar CAD, Australian dollar. Okay? These are the majors. Okay? When they have the dollar and the pair are the major pairs. They're the principal pairs. Now, when they don't have the dollar in the pair, they're called cross pairs. For example, pound yen, euro pound, Swiss pound, and there's a lot of currency pairs. And when they don't have the dollar in the pair, they tend to be bigger moves in there, more volatile. Okay, which in this market, volatility is good, right? That means we can capture pips in that trade. Now the currency that's on the left hand side is called the base currency. The currency that's on the right hand side is called the cross currency. And we're always going to see how many dollars does it take to make 1 euro. Okay, I mean to buy 1 euro. How many dollars does it take to buy 1 euro? And that's the exchange rate. That's what fluctuates. That's what we're going to see in the charts, and I'm going to show you where you can get charts. Now these currencies, you're going to see they have nicknames. The dollar is sometimes referred to as the greenback, the euro as the fiber, the pound as the cable, the Swiss franc as the Swissy or Chiffy, the Australian dollar as the Aussie, New Zealand dollar you'll see it referred to as the Kiwi, the Canadian dollar as the loonie, the Japanese yen or the JPY as the yen. And these are the abbreviations. They always have 3 letters. This is the way. So when you see the AUD, you know that's the Aussie dollar. The USD is the US dollar. Now the currencies trade in what's called pips. And pip, the abbreviation of pip is price interest points. Okay, so for example, if you see right here we have 157.50, means it takes $1. For example, if we're seeing the currency rate for the euro against the dollar, that means it would take $1.57 to buy 1 euro. Now, the last 2 numbers are 1/100th. Okay, so they're smaller than a penny. They're 1/100th of a penny. And when we move the pips, that's how we make money in this market. So if it moves from 51 to 52, okay, we say that it moved a pip. And every time it moves a pip, we can make money. Okay, 100 pips would be, if it moves just 1 penny, if it moves from 157 to 158, it moves 1 penny, that's 100 pips. Okay, now there's different types of lots. And what we trade here in the stock market, you buy stocks, okay? One stock, two stock, three stocks in shares, okay? One share, two shares, three shares. In the options market, you buy contracts. In the Forex market, you buy what's called lots. And one lot, and there's different types of lots. There's standard lots, there's mini lots, and there's micro. A lot of brokers, okay, have what's called a micro lot. No, we'll just put it here, okay? Now, the leverage, depending on where you're in the world, it'll be between 50 to 1 in the US or 200 to 1 if you're outside the US is the typical leverage you can get. Now, what does the leverage mean? That a standard lot, you're controlling 100,000 of the currency, but you don't have to put the 100,000. You put $2,000. Okay, so if you have 50 to 1 leverage, like in the U.S., you control 100,000. So you only have to put 2,000. Okay, that's what 50 means. You multiply 50 times 2,000 gives you the 100,000. Now, the important thing to know here is when you put a contract, you're going to make $10, okay, or lose, obviously, if it goes down, depending on what, you can make money if the market goes up or down, but if it goes against your position, you make or lose $10 every pip that it moves. On the mini, you put 200 to open, and you make $1 every time it moves a pip. And then on the micro, you're controlling $1,000 lots, okay, and you only have to put $20. So depending on how much money you have to start, is if you're going to start trading standard lots, if you have a bigger account, if you have a medium-sized account, you're probably going to be trading with mini lots. And then if you have a real small account, you might be trading with a micro account where you put $20 to open the trade and you make 10 cents a pip. Okay, so these are the three account sizes. Okay. Now, the market order, and you're going to see the different lots depends on the investment, is depending on the leverage of your broker. Now, based on U.S. regulations, if you're a U.S. citizen or resident, you're living inside the U.S., the maximum leverage you can have is 50 to 1. If you're living outside the U.S., you could have 200 to 1. Now, what does that mean? That if you had 200 to 1, you only have to put $500 to open up the standard lot. Here, you only have to put $50 to open up this lot, because the leverage, you have a higher leverage. Okay. Now, there's 3 orders that you got to know. One is called a market order, the other one's called a limit order, and the other one's called a stop order. Okay, and we're going to learn how to place this when we go. Market order is when we're buying at the market, at the price that it's right now. And there's always 2 prices to a currency. There's the price that we can buy and the price that we can sell. And the difference in the price, okay, is called the spread. And it's what the broker makes. There's no commissions in Forex. The broker makes its money by the spread. Now the limit is where we're going to place, we can already leave our order and say when it reaches this price, I want to close out at this price and take profit, because I'm not going to be in the screen or at my computer or at my phone. I want it when it gets to a certain price to close this price. And the stop order is the bottom of the order. So when it goes down and it hits a certain price, there's where I want to be stopped out. Okay, now we're going to learn, most traders analyze what's called, the professional traders analyze what's called a Japanese candlestick chart. And a candlestick chart, okay, has what's called, and we're going to see the candle has with the body, and the body is at the price. If we're looking at this and say this is the daily candle, this is where the price opened in the day, this is where the price closed at the day. The body of the candle is always going to tell us where the price opened and when the price closed. The high of the candle, or the low of the candle, which is also referred to as wicks, okay, is these wicks give us the highest price it got and the lowest price. The color of the candle, okay, will tell us if the market went up or if the market went down. And you're usually going to see the bears and the bulls, the bulls when the market goes up, the bears when the market goes down. Okay, now the chart from left to right moves the time. From up and down, we'll see the price, or with the pips or the points. This is how you read the candlestick chart. Okay, now let's go and I'm going to show you where you can get a candlestick chart. If you go to Forex in Miami, this one's you go to brokers, a demo or a live account. You can open right here. Click a demo account and you put your info here. And you put finish, and it'll let you download the platform, or you go to live account here and you can download, you could apply for a real account with the broker. Now once you have the platform, most of the platform that is traded is called the MetaTrader 4 platform. Okay, now this MetaTrader form is a charting where you can see the charts, and okay, it's also a place where you can place the trade, and I'll give examples on how to place the trade. So for example, but before that, let's learn how to read the trades here. So let's go right here to the pound dollar, and I'm going to have a whole video on just how to use this MetaTrader platform here. Okay, so now we're seeing right here, this is the candle for today. If we go to the daily, means that each candle is worth a day. If we go to the 4 hours, each candle is worth 4 hours. If we go to 1 hour, each candle is worth 1 hour. If we go to 15 minutes, each candle is worth 15 minutes. Okay, and through the lessons you're going to learn on how do we analyze this market. Now right here we can see the pound dollar, okay, and so it means it opened right here and the day hasn't closed yet, so it's still trading today, but the candle's blue means that the pound's value has increased over the dollar's value, because we're always seeing the base currency here. So if the chart's going up or the candles are moving up, that means that the pound is getting stronger and the dollar is getting weaker, or vice versa. If the pound's going down, that means that the dollar is getting stronger against the pound. Okay, so here we're seeing the candle chart here. If you get this cursor right here, you can see, and you can put your price. When it opened up, it was at 121.81, and right now it's at you can see the black right here, 138.30. Okay, so 81 to 30. Okay, 140.30 and 142.81. Okay, so you subtract the currencies, so you're talking about 19 plus 30 right there is 49 pips that it has moved today from the open price to where it's right now. It's gone up 49 pips. So that means if you were trading a mini lot and you bought the pound, you would have made $49. if you bought a standard lot, remember the standard lots pay $10 a pip, you would have made $490. If you bought a mini or a micro lot, which is 10 cents a pip, you made $4.90. So depending on how much you make, you can see there the potential with when you start trading standard lots and $490 in a day with a very small moving day. There's days like this one that you can measure from up here to down here. The middle number, just take off the last one. You see how it says 2088? Just take the last number out. It tells you that's 208 pips. Imagine buying right there. That's $2,000 in one day if you bought right here and you sold it, or 200 on a mini. And we're going to learn, what tells you to buy, what tells you to sell. The nice thing with if you go to the site and you sign up as a member with us, I'm going to show you how to sign up. WGAlerts.com. You're going to get on an app, and you're going to get emailed the exact price, when to get in, when to get out, a trade alert with your limit, what currency to get in, and your stop loss, where to place it. Okay. Now you could change here the languages. That's a nice thing. Anywhere you're in the world. I got a lot of students in Spanish. I have a lot of students in English. So it's just going to tell you to restart. And you can see how now it's in English. Okay. Now here where you go to this tab right here, new chart, here's where you can open up a chart, and I'm going to show you how to put a template in where you will have and make your candles look this way. Because right out of the box, the MetaTrader, when you open it, it gives you candles like this. I don't like those candles. Okay. Now, if I want to buy currency, and you can see how there's all types of currencies. If you're not seeing all the pairs, you can right click here over Market Watch, and you can put Show All, and it will show you all the currency pairs. Okay. Now, for example, let's look at the pound dollar. Now, the pound dollar, we're going to learn in the next lesson how to read these candlestick patterns. But you can see right here it has a doji and then a bull candle. And if I go to the 4-hour chart, okay, look how the market had gone lateral and it broke out. Okay, that's a real nice buy, and I'm going to show you how to find these strategies that I use. Now that's a real nice buy area. So if I want to buy the pound, because I think it's going to go up, I go to New Order, okay, and on volume, I'm going to place the lot size I want to place. A standard lot, you would place right here 1.0. A mini lot, you would post 0.1. A micro lot, you would put 0.01. Okay? So if I put right here, say I want a standard lot, which pays me $10 a pip, okay, and I want to buy this currency, you could see how it's telling me the buy price. This is called the ask price. Ask price is the price I could buy at. Bid price is the price I can sell at. Okay? So if I want to buy at this price right now, it's at 142. The sell is at 140. You can see there's 2 pips difference, and that's what the broker makes. Okay, so I need it to go up 2 pips. So if I buy at 42 and I want to sell it immediately, I would lose money because I would have to sell it at 1. So I have to wait till it goes 1 pip to start making money. So I'm going to put right here a buy. Okay, and you can see how it entered the market right here. I had other positions showing this. This is a demo. I'm just showing how to execute these trades. Okay, on my live account, I'll put the real trades, but I really like this trade, the pound. I have it on my live account too. Now, the stop loss, let's say I'm going to put it below this low. Stop loss is if the market goes down, when it hits here, I want to sell. I don't want it to continue going down, down, down. So I want to limit my losses. That's what's called a stop loss. How do I place it? I select the trade. I right click it. I go modify order. And I go where I want to put the stop. So if I want to put it down here at 142.25, some brokers will give you a 5-digit. Forget about that last number. You just want to put this number here. So we're going to say 142.25. Okay, the stop loss. Now let's say I want to put there's also a take profit. Let's say when it reaches 145.00, 1.4500, because it starts going up, and I'm not at my computer or my cell phone, I can leave it programmed. That's a nice thing. I could just let this trade go. When it gets to this area, it'll close in profit. That's what's called a take profit order, or sometimes referred to as a limit order. So I click right here, modify, and I put 145.00. Okay, and I put right here, and now I have my limit order right here. If I want to change the limit order, I could modify it and say I want to bring it down to 144.50. Okay, and you see how it places a little red line? So it means when it hits that line, it's going to sell, and you're going to make the profit. If I want to measure how many pips, I can get my little star right there, cursor, and measure. So if this hits my target, I will make 113 pips. Or in this case, I'm trading a standard lot, so that means $1,100. And this can move. This is a 4-hour chart. This can move in 4 or 5 hours. I can make the $1,000, and that's when you're gonna start learning how to make the money work for you, not you work for the money here. Okay, so the pound is how you place a long trade. Now this is when you think the currency on the left hand side is going to go up. Okay, now for example, let's take a look at the dollar, Shanghai dollar. Now I've been monitoring this one, and you can see how it's made. This is something I like trading, these channels. When a currency is going in these channels, when it breaks this channel, there's big moves. If it broke it to the downside, there's big moves to the downside. Okay, and you can see I placed several trades. I took this trade. Look at the New Zealand dollar. Boom, it broke the channel. It head down. Okay, here it had a ascending wedge right there. It broke this wedge, head down. Just with these little moves, they look little moves, but these moves make you a ton of money. Look at this, 100 pips. That's $1,000 if you're trading a standard lot. This move, 71 pips. That's $700 trading this account right here. Okay, so let's look at the Shanghai dollar. Right now, it's breaking this pattern. Right? You can see how it's breaking this thing to the downside. Also, when I go to the daily, this gave me a long wick candle. You're going to learn in the next lesson how to read these long wicks. And you can see how the market is going to start taking down to the downside here. So if I go to the 4-hour chart and I want to make money on this fall, I will enter the market, what's called a short position. I enter the market selling. Okay, I don't buy first, I sell first. So I enter right here selling. Okay, and you can see how it entered and it tells you sell. Sell means you're going to make money if this market goes down. Sometimes it confuses you because people say, how can I sell if I didn't buy? Just you're selling the market to enter and you're buying to close the position. So you want the market, well, you want the currency on the left hand side to drop in value. So in this case, I want the dollar to drop in value and the Shanghai dollar to increase in value. Now my stop loss when I'm going down, remember I lose money if it goes up. I want it to drop. So I'm going to put a stop loss above the price, and usually you put it above the last high. and we're going to learn a lesson on highs and lows. But right here's the high, which is at 141.22. So I put right click here, 141.22, and I got my stop loss in there. Now my take profit, I'm going to make money when it drops. So if it drops to 139.20, I make money. Okay, so I right click here and I go to 139.20. Okay, and now I have my stop loss and I have my take profit right there. Okay, and here you can see how much money you're making or losing on the trade. Obviously, you're always going to start negative on, and it's going to be fluctuating depending on when it's moving, because don't expect it to just start going up right once you buy. It could go down a couple pips and then starts moving your way on your analysis here. Okay, depending on your lot size is with your equity management, you'll either be trading standard lots or mini lots. Okay, so let's go back here to the slide here. Now we're going to teach you when the market goes up, down, or sideways. Remember, you can make money if the market goes up. We buy first on a long, this is also called a long position. Okay, our stop loss is below the price and we'll make money when the market goes up. Or we can sell first and make money when the market goes down. Okay, that's when we think that the currency is going to go down. Okay, so we learned margin calls is when you don't have enough money in your account and the market, they'll close out your positions. Okay, leverage, we talked about leverage, means you're only placing, say, $200 of your own funds on a mini contract, and you're going to be controlling 10,000. Okay, well, we're going to talk a lesson. There's also interest if you're holding long term. Okay, and these are just the differences between the stock and the currencies market, which we trade both. You can see my lessons on the stock market too. Okay, now a buy price and a bid price, and I'm going to review there. The buy price is known as the ask price. The sell price is known as the bid price. So when you go right here in your order, you see how right now the pound is at 143.33, 32. Obviously the market's open and moves every second, and the sell price is on the left hand side, 143.30. The difference in price is what's called the spread. Okay, and you can see that the spread is what the broker charges for each transaction. Okay, this is another platform right here where you can see the difference between the buy and the sell price. Now there's two ways to make money on the Forex market. Most people who don't know, they're trading by luck. I think the market's going up, I think the market's going down. The problem with that, sooner or later your luck runs out and you're going to lose your money. Okay, now the correct way to learn on trading is through education and mentorship and following a professional. The reality of trading, people who try to do this by themselves without any education, 90% fail, only 10% succeed. If you want to be on this top 10%, okay, you got to do what the 90 other percent don't do, and that's learn from mentors, follow the professionals. Okay, and you don't want to be like the rest of the population. 95% of the population works for money. They have to go to a job and work for money. Okay, only 5% of the population have the money work for them, and that's truly the financial. If you have to go work for money, okay, you want to create this financial freedom. You want to change your mindset and start having your money work for you. Now, what's the method that we use here at Wealth Generators? you get to mirror the market experts. Okay, people who have been around in this market for years. Okay, we do the research, the technical analysis, the trade analysis, and we deliver the strategy for you. So you have market experts, okay, delivering it to you. And how do they deliver it to you? These are guys with decades of experience, okay, in the company, okay, and you get this from day one. You get to start following through trade alerts these experts. Okay, now how do you mirror the market? You're going to have a website where you can see the trades that they're placing. You can get them through email. They're going to email them to you, or you can download the app. And the app is real neat because it gives you a little pop-up alert when there's a new trade to be placed. And all you have to do is just copy that trade alert. It's going to tell you where to put your stop, where to put your limit, what currency we're buying, or what currency they're shorting. We're going to the downside. So that's a real neat place where you're going to start making money just mirroring the experts. Now there's two packages. If you want trade alerts for the stock market, they're $129 a month. Okay, and you're going to get trade alerts for the options, stocks. Okay, or if you want the Forex alerts, they're $129 a month. Okay, now it requires a one-time purchase where you're also going to get a master trading for $49, and this is a one-time purchase to be able to use these alerts. Okay, the nice thing about the company is they put their money where their mouth is, and they give you a triple return guarantee. It means you pay $129 a month, you try it out for 6 months. Okay, if you lose money, okay, they're going to give you back triple. Okay, means they'll give you a check at the 6 months. All you have to do is show that you execute the trades. Obviously, you can't say you lose money and you never place the trade. Okay, so you have, and it could be in a demo account or a live account. It doesn't have to be real money. You could do a demo account. That you're trading no more than 10% of the total account per trade. Okay, you submit to wealth generators, and they give you 2,390 back. So you have absolutely nothing. That's how confident they are. These experts know what they're doing. Now, a bonus for people who get in under my team, I'm going to give you guys extra of what if you sign up with wealth generators under my link, under my team, you're going to get 2 days of intensive live classes. I do them different parts in the world. If you can't make it to where I'm at, I also broadcast them monthly. These are 2 days intensive, complete days of training on the currency market. I have a live trading room every morning where we analyze trades. Obviously, this is what you get. These are the trade alerts and the app you're going to get with the wealth generator. You're also going to be in a private WhatsApp group that I have that we review trades. I post videos, updates. You're going to get weekly online coaching sessions. You get the 2-day intensive once a month, but every week we have a mentorship class that we do them through webinars. And you're going to have access to our recorded library education. So all the sessions get recorded, uploaded. You can review all these lessons, and it becomes a wealth of knowledge that you can learn from these education library. So if you want to sign up today, I'm going to show you how you sign up. You go to www.wg alerts. That's my link. Okay, I'm an independent rep for wealth generators. You could get started right here. Now, if you just want to be a member and just get the alerts, okay, you're going to pick this one. You're going to pick the country. You're going to select your language. Okay. Now, if you also want to refer members, that's a nice thing. If you like and you're part of my team and you know other people that want to trade, the nice thing the company has, if you become a qualified generator, you're paying a one-time $120 fee. But now what happens is you could start making money referring friends. The first step, if you refer 3 people, your $129 membership becomes free because you're already making more money than what it's costing you. So I always tell people, get in the qualified generator. You're going to find 3 people that want to be part of our group, especially our group that we have the trainings, the mentorship sessions. You're going to learn how the alerts. You're going to become an expert. And these sessions are not only on the currency market, they're also on the stock market. Okay, so you're going to go here. You're going to pay $120, and then you're going to pick the alerts. Do you want the stock alerts, or do you want the Forex? So say if you want the Forex, remember it requires the one-time class. You're just going to put 1 and 1. So if you're getting the Forex, you're going to pay the 49 plus the 129 plus the 120. So it's going to be 300 for the first month, and then 30 days later, you're going to be billed the 129, which 129 is extremely cheap. There's courses to learn what you're going to learn with us that people would pay $3,000 to $5,000 for a course, at least $2,000 for the course, just to be able to have access to the training that we do live, these 2-day classes. If you're not part of my group, I usually charge thousands for that. So you're going to get that included for just signing up, and you have the opportunity to potentially get this free. If you're for 3 members, you're not going to have to pay the 129 anymore, and your team could start growing, and you could start making even residual income from referring members. Okay, so you're going to put all your info here, your social, everything that has a little star, your first name, last name, your credit card information. Okay, you go process and continue, and once you did process, it's going to tell you one more step to continue, and if it went successfully, your card got billed. Now you can go to wealthgenerators.com, and you're going to be able to log in, okay, right here. And I'm going to contact you. Obviously, I'll know when you're part of my team, so you get the extra bonuses. And I'll show you, generate the links and all that, how you can start attending our sessions and be part of what's up group. Right here, you're going to get a username and password. Right here, you're going to see the alerts. Okay, and you could see even the trade history. Transparent. They tell you how many pips each trade made or lost. Okay, you can see there's some losing ones, positive ones. Obviously, the positive ones outweigh the negative ones, and you're going to be able to download the app. If you go to you look for the App Store, Wealth Generators, and you're going to be able to download the app. Okay, so I hope you become part of my team. Learn. I'll see you in the next lessons. Have a good day.